Okay, please confirm if you can see my screen.
I can see your screen.
Yes, I can see your screen.
Okay, perfect. All right. So once again, good evening, everyone, and thank you for joining this presentation at such a short notice. I've promised severally that we're going to have this class. So this class is a refresher. It's a refresher class, and just to also look at, you know, um, some of the skills that we have learned over time, how we are utilizing them, and if for any reason we are finding it difficult to utilize, we can ask questions, gain clarifications, and see how we can better our trading. So today I want to start by letting you know that first one is to engage in this training, which is what I believe a lot of us has done multiple times. For a person like me, for myself, I don't see any end to Forex education. So I always believe that there are new things coming out every day, and then there's opportunity for improvement as we tag along. So every time I see opportunity to get trained, I jump at it. And if I see a new technology that I think an estimate will be beneficial to my trading, I also jump at it. So there are a whole lot of things that you need in order for you to be able to trade effectively. There are several tools that you need to trade, and one of it is your computer. Okay, basic requirements, your computer, and then maybe a phone, a very good phone. Today we have a lot of phones that you can do analysis on, but not as good or effective as you do it in a computer. And then with the computer, you have access to the MQL5 database. So every time you create an account. Okay, every time you create an account, I'll just quickly go to MQL5. This is their website. So MQL5. So MQL5, they are the main the main designer or the owner of MetaTrader 4 and MetaTrader 5. So MetaTrader 4 and MetaTrader 5, they are generic trading software that has become acceptable globally by every broker. Okay, almost every broker uses MetaTrader 5. Just a few, very few that are using other software to trade. But then MetaTrader 5, MetaTrader 4 has gained worldwide acceptance and is so massive in the sense that what you are seeing on my screen now is, let me log into my account. So I'll just quickly log into my account. Everybody, in as much as you are using a MetaTrader 4 or a MetaTrader 5, you must, as a matter of necessity, have an account with MQL4 or MQL5. This is not your trading account. This is not your MetaTrader 4 account. Okay? When you open your MetaTrader 4 or your MetaTrader 5, so if I take MetaTrader 4 for instance, if you come to this top here, you see something that is showing you community, right? If you click on it, it opens a page for you where you have things like messages. Okay, these are developers, okay, people that create indicators. Okay, a lot of them will just, in a way to market their services, they drop general messages for people, and you can see it here. And it's very easy. If you go to your what's it called, your terminal, you come to your terminal, you see trade, you see exposure, account history, market. So if you click on market, Market will take you to the MetaTrader 5 market, right? So this is the MetaTrader 5 market. This is the same market that you are seeing on the web, okay? So most times, if you are not registered, you will not be seeing all this stuff. You will not be seeing all this. So this is like page 1 of 1,429 pages of indicators, okay? And these indicators, if you have purchased indicator, it will show separately here. Like here, if you see this place, I say purchased. If I click on purchased, it will show all the indicators that I have purchased from MQL5. It will just show a list of all the indicators. Okay. Now there are some that maybe, so when you buy indicators, there's a number of activations that you can use. So meaning that if you install that indicator on the computer, and let's say the indicator has 20 activations, that your installation on that computer is one activation. If for any reason you have to change that computer, you will require another activation. So when you use one activation for a computer, when you go to another computer, it will read that you have used two. So in some cases, some indicators, the activations are not so much. Some may be just 10, some may be 5, some may be 2. It all depends. Okay. Now, if you have used up the activation, it means that you need to pay for that indicator again, depending on the amount of the indicator. So like this one, this is a chart symbol changer and synchronizer. This is $45. You can see it has 15 activations. Okay. 15 activations. So if I come to MQL5 portal and go to my account, if I click on my name, this is my account. And if I want to see all that I've purchased about 54 indicators. If I click on these purchases, it will show me everything I've purchased. So look at this chart symbol changer and synchronizer. Now, this is the one for, let me see. This is the one for MT4. Okay, look at this one. This one is for MT4. So I bought it for MT4. I also bought it for MT5. Now, when you buy it, you see this pop-up here. You see this comment that says, this product already purchased, install it on the terminal. Okay, whenever you have paid, once you have paid for the indicator, it will allow you this opportunity to be able to download it. Now, I'm telling you this because of tools, because sometimes you see my screen like this, right? You don't understand what is happening. This is my screen. This is monthly chart. This is weekly chart. This is daily chart. And this H4 and H1, I can fluctuate this one to 30 minutes, 15 minutes, 5 minutes, 1 minute. It doesn't matter, right? I can change this one any way I want, but this one, I keep them constant. Okay, why? Because I can see the big picture. But now the beauty of this indicator that I'm talking about now is this. Ideally, I would have come and say, I want to change, if I want to change this currency pair, now this is Bitcoin. I want to change it to NZD card. If I come here and click on NZD card and drag it here, it will change. You can see this is NZD card, but you can see that the others are still showing Bitcoin, right? Every other thing is still showing Bitcoin. I can click on NZD-CHF and drag it to this screen, and this becomes NZD-CHF. Now, I'm only changing one screen. But with the help of this indicator, with one click, I can change all the screen at a time. I want to change to Euro USD, everything. I want to change everything to Euro USD. I just come here and click Euro USD. Can you see that everything in one shot goes to Euro USD? If I want to change everything to NZD USD, I just come here, click it one, and everything goes to NZD USD. Why do I need to do this? I won't be able to be doing my analysis and I want to change the chart. I will not be doing one by one. It doesn't make sense. It's too complicated, right? And you want these things you want to see this thing really, really fast. You want to see this thing happen fast, right? So this indicator for instance, it's not free, and you can see the amount there is $45, okay, for this indicator. So if you go back to my main screen of Porsches and scroll all the way down, you can see I've spent a total of $2,345 purchasing indicators from this site alone. This is not all I've spent in purchasing indicator. I'm sure I probably would have spent more than $10,000 purchasing indicators. But for this site alone, what I have spent is $2,345 on this site. So all these indicators you are seeing, they are indicators that I have purchased. Okay, now every indicator have a purpose, okay, that is serving. And now if you look at these activations, look at this activation left. This one has 9 out of 20. This one has 11 out of 14. This one has 11 out of 20. This one has 3 out of 5. This one has a 9 out of 20, 3 out of 11. Okay, just like that. Now this is a mix. What you are seeing is a mix of both MT4 and MT5. Okay, some are MT4, some are MT5. Usually the ones that are MT5, they will write MT5 at the front. Why the ones that are MT4, they don't bother, because MT4 actually came before MT5. And over the years, they've been using it like that without including the name MT4. So almost everything you will see MT4, you will not see MT4 attached to the name. But most of the MT5, you will see that MT5 is attached to, like this one now. This is the same indicator. This is the MT4. This is the MT5. On the MT5, I have 8 activation left out of 16. On the MT4, I have 10 left out of 17. Now, this is not the first time I'm purchasing the indicator. So I purchased this indicator like twice. Okay. Something happened that I've changed several computers. Okay. And for some reason, you reformat your computer and you need to reinstall. That is a fresh activation. And that's why you see that these numbers, are changing. Like you look at this one now, I've only installed this indicator once. I've not installed it again. It's an MT5 indicator. So this interface that you are seeing, this is MT4. This interface is MT5. Okay. And you can see I have the indicator on both interfaces. I don't want limitation. I don't want something that will limit my ability, to be able to trade. So once I purchase indicator on MT4, when I find out that that indicator is doing well and performing well for me, I go and look for the MT5 version. So if you come to the MQL5 Portal Direct, you see you have market. When you click on market, under market, you are going to see MT4 and MT5. Everything you want from MT5, expert advisors, indicators, libraries, utilities. Everything you want from MT4, expert advisors, indicators, libraries, utilities. All of this you can purchase from this place. Okay. And you can have several indicators. So, and you can also filter. You can decide to say, okay, I want to see only paid indicators, or I want to see only free indicators, because the same way you have paid, that's the same way you also have free. So if you now I'm seeing MT5, if I come to this MT5, I can filter. Let me see. They've done some modification to this site, but let me see. So let's put a name here. Say, if you know the name of the indicator you are looking for, you can just type it, okay, and it will pop up something for you. So now that I've typed advanced, you can see it has brought out this page for me. So here I can say I want to see only paid indicators, and I click on paid. So every indicator that is showing right now, this is 38 pages. This is the first page out of 38 pages. Okay, they are all paid indicators. That is indicator that you need to pay money to get. If you jump to page 38, you are going to see a lot of it. So some of them are very expensive, some are free, some are not that expensive. Okay. For instance, this is mean reversion. This is mean reversion indicator. You can see I bought this indicator already. Okay. If you want to see how this indicator work, I can just take you to my chart. Maybe any of them. I have it for MT5, I have it for MT5. So I can just come here and apply mean reversion. Okay. So let me see mean reversion from here and go to market. So any indicator you buy from the market, it will come under your indicators. It will go under market. So you see market. Okay. Or you click on market and then you look for any indicator that you have bought. Okay. Only the ones that you bought comes under market. The ones you didn't buy, they will go under the free section. So I'm looking for mean reversion. So I go to M, mean reversion. So once I click on it and say apply, if I just apply it like this, it's going to give me white background. Usually I don't like the white background. So what I do mostly is I come here, put my normal background, apply the indicator, and then I go and switch off the white background. So if I come down all the way to this point, so if you look at the comment here, it will tell you. So here say use white chart, true or false. I change it to false, and then the indicator will be applied without that white background. Okay, so what you are seeing on this indicator is showing you the resistance and support levels. Okay, and you can see that anyone that this indicator picks, it means that that level is kind of significant, right? And now while I am on H1, I want to see daily support or resistance, or I want to see weekly, or I want to see H4. All I need to do is to go to the indicator and edit, switch the time frame from current time frame to the time frame that you desire. Maybe you want to see 4 hours. You click on 4 hours and then you apply. As soon as you apply, you are going to be seeing 4 hours support and resistances. And when these resistances and support pops up, one thing this indicator does for you is to tell you the level that has been tested multiple times. So you see this color. So if you come back to the indicator, for instance, and say mean reversion, you see these colors here. Look at this level. This color green, it tells you that that level is locked. It's a supply level. The demand level, the locked demand level is green. If you see the retouch, maybe when the market creates that indicator and come back and touches that level again, it changes to blue. That's for demand. While for supply, it changes to red. Okay, retouch. So as you are seeing this red supply now, what it means is that the market has come here before and the market has come back here again. So when the market comes back to your supply zone or your demand zone, what are you going to do? You expect a possible reaction. Now, in this case, I think this is easy. I can easily say, oh, this is the zone. The market has come back to this zone. That's why this color has changed to red. So what am I going to do? Where is the highest point before the zone? Somewhere here, right? So where are the support before that highest point? Before this higher point, I have this support, I have this support, I have this support. Okay, these are support level before the highest point, right? So what can I do if I want to take advantage to trade from this supply level that has been retouched? What I need to do is to draw a trend line from any of all these levels that I marked. Draw a trend line from here. For instance, I come and push all the way. So I think it's better to take this one. Okay, I take this one. Now, when I take this one, when I take this level, I stop here. What I'm looking for a trend line break, my entry. If I want to take this trade, I will take this trade at a point where my drawdown will be 0. Okay, it's either I take it by doing something like set stop, or I take it by doing something like sell limit. So when the market breaks the trend line, okay, this is what I will do. Let's look at where the market breaks the trend line. This is where the market breaks the trend line. Agreed? Okay, do we agree? This is the point. This is the candlestick that breaks the trend line. This one. Okay. Now, after this candlestick breaks the trend line, for those that understand my trading strategy, I said when the market is moving, if the market is moving and you are seeing black candle, black candle, black candle, black candle, black candle, that is the next candle closing below the opening of the previous candle. If you catch that, let me know. If your market continuously is giving you black after black after black after black, that is sell candle. It means that every subsequent candle, they are closing below the opening of the previous candle. Okay? Now, I did give you guys a formula long ago. I said when the market breaks this support, this trend line, what you will do, you are going to wait for the first candle that forms a bullish candle as opposed to the bearish candle that were coming down. So the first candle that form a bullish candle is this one, right? This one. I said when you see these two candlesticks, this is a black, immediately followed by a bull, you pause and take a deep breath. And then I say, go to the back of the Aikianshi that is on top of the black and this candle, the black and both the bearish and the bullish candle. I say, go to the back of it. Where is the back? This is the back of this candle. This is the back of this candle, right? And so when you get to this back point, this market will naturally pull back to this zone between these two places. You see this Aikianshi and this Aikianshi. When the market pulls back to this level, and then the market gives me a bearish, bullish, engulfing confirmation candle, I put a sell trade here. Or if I want to be very, very aggressive, I'll put a sell trade right at the back of this candle, right here. As soon as this market comes and hit here, sometimes when I post my trade on the group, sometimes you guys will wonder, how did he take it? I'm just telling you how I'm taking the trade. I can be very aggressive sometimes. As soon as I have met all these conditions, condition number one is that the market form a resistance. The market comes back and tests the resistance. Now, if you don't have this indicator, you may not be able to tell. This is the candlestick that causes this thing to change to red. This very candlestick, this wick that touches this place. That's what changes this color from dark slate gray to red. Meaning that this resistance zone, what is given to you is a zone. It's not just a line. Okay. You see that the zone starts from here, and you can see that zone is actually picking candles, right, to create the zone for you. So let me go down a little bit. Look at it here. So this is the top of the zone, and this is the bottom of the zone. So the market did all this beautiful movement and come here, and then it changes this zone to red, meaning that I have a retouch of this zone. And after I confirm that I have a retouch, I say draw a trend line against all the movement that goes to that zone. Now, when I drew the trend line, I say wait for that trend line to break. And the market break the trend line. And I say aggressive people will enter the market as soon as it breaks the trend line, which is fine, no problem. That's good. Okay. Because as soon as the market breaks the trend line, you can enter aggressively, but while you are entering aggressively, I want you to look to your left and see this level and this level. These are support level, right? So while the market breaks the trend line, it continues to break the support level. Usually when the market breaks support level like this, the market will come back and do a retest. Now the market breaks this, breaks this, breaks this, and break this. And then the market start coming back for a retest. Now this thing is so easy, so nice and easy. Can you see that all this movement of this candlestick from here in this retest movement, all these candlesticks, they're all bullish candle. Because somebody might come and say, oh, the market has gotten to a previous support level, so let's sell. You are selling on a massive bullish candle. That's suicide mission. Okay? Because you will just be selling and the market will just commence going against you. And the next thing you will say is that the broker has been waiting for you. Nobody is waiting for you. You are the one that made the wrong decision. You made the wrong decision at the wrong point. Why do I have to wait for this candle to form? When this candle forms, this is a signal candle to sell. 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 So once I establish that the market is in the sell direction, I start looking for all the signal candles to sell. Okay? Look at this one. This one self gives you a very good insight. Look at this. This is a previous resistance. And the market comes back to this previous resistance and form for you a shooting star. Immediately preceding that shooting star is a bearish engulfing candle. Signal candle to sell. Okay? So you can actually sell the market from here or sell the market at the retest of this order block. This small candle you see here is what we call order block. Okay? If you want to be very, very aggressive and very accurate with your entry, you will allow this bearish candle to close. You will not take the trade. In fact, you can even come and put a sell limit here. So when the market did all this initial gra and goes up to retest the order block, immediately the market hits your sell limit and the market starts going in your favor. And somebody thinks that you are using magic to trade. It's not magic, it is knowledge. Okay, so you come back to this place here. I know I posted something long time ago. I don't know if I can pull it out from that group. Let me see if I can pull it out. Let me see. The trading, sorry. Going to the search. Trading strategy. How many of you remember this thing? I posted this thing a long time ago. It's not popping up. It's supposed to pop up. Let me see something. Close, open. ZipatFX. The team must have. Okay. I think I lost it. But some of you may still have it. Okay. Some of you may still have it, I believe. I'll need to go back. Where did I save that thing? Let me see. If I can get it. Okay, maybe what I will do, I will have to share it again for you guys. Okay. So, but if you go back to that strategy, this thing I'm explaining to you is very clear there. Okay. So that's one of the conditions that I used to. So there are plenty ways you use it, but I'm just explaining one to you. And this is very, very straightforward. And that's one of the essence of me having all these charts, you know, all this chart like this. Yeah. Okay. So I can come and apply this indicator. I can apply it to this chart, right? So let's apply it to this chart and see. Mean reversion. Let me just add it to favorite, out of favorite. So you can just pick it from here and drop it here. Then go force and say yes. Okay, so this is it. This is the indicator on now. Look at this weekly now. Look at this weekly. Let me compress it a little bit. Look at it. You see that right now, the market just did a retouch of a demand zone, telling you that the market is going to buy, right? That is, I mean, the overall movement is probably going to be a buy. Okay. Now, because the market hit this zone now, because this zone is recent, right? Because this zone is recent, I can do something. I can change this to weekly. So that when I switch the chart, it will remain weekly, right? Weekly. Okay. So if I switch this chart to say H4, I will still be seeing that weekly. Are you seeing it? Are you seeing that weekly retouch demand zone that is still there? That's the weekly zone. Okay. I can also switch this chart to 1 hour and see that weekly zone there. I can switch this chart to 30 minutes and that weekly zone will still be there. Now, as a trader, the market has hit a demand zone. Okay, this is a demand zone. Now, you can even do something very, very spectacular and aggressive. When the market was here on the weekly, what you are seeing is a week, right? But now, if I switch it to 1 hour, okay, what you see is not just a week. So if you zoom it out a little bit, okay, you can see when the market came out of this zone. This is the candle that came out of this zone on the 1 hour chart. Look at it, this candle. And now the last support, the last resistance before this low, before the market got here on the 1 hour chart is this one, is this place here. This is the last resistance before the market come to this bottom and started coming back up. So you can enter this market in two ways. It's either you draw a trend line, okay, that comes like this, and then comes like this, and touches this place, and then you see the market comes and break this trend line to give you aggressive entry, or you wait for the market to break above this last supply zone, this last resistance before the low, the market breaks above it, and then you take an aggressive buy, or you go very, very aggressive and say, this is a weekly demand area. So as soon as the market is coming out of this weekly demand area, you want to take a trade. Why do you want to do that? Because the market has formed for you here. Look at it. This is a bearish candle followed by an indecision candle followed by a bullish candle. Now the top of this pattern is actually the top of this candle. So you may want to buy from here, which is fine, but ideally it's better you wait for the market to break above this top of this candle. Okay, because this is an evening star. Sorry, this is a morning star pattern that says you should buy, right? Morning star. But now a morning star that the bullish candle did not close above the bearish candle that forms the morning star is not a very valid morning star. The market can come back against you. But if you wait for the market to take out this high on this morning star on the other side, you can take a buy from here and you can have peace that the market will go in your favor. And this buy that we are talking about now is all this movement that you are seeing presently. Imagine that you took this trade from here and then the market run all these pips in your favor. All these pips in your favor. And yeah, what the market is doing now, the market has pulled back to a previous resistance level or a previous support level, right? Yeah. And the market has come back here. Now, what the market will most likely do now is for the market to break, the trend line, okay? And then it puts you in another entry. So you can actually have entry one here, aggressive, entry 2 here, aggressive. This is entry 2, somewhere here, this break. Entry 3 is what we are looking at right now. Entry 3. So I have entry 1, market coming out of the weekly demand zone. Entry 2, the market pulled back and continues. Entry 3, the market pulled back and continues. And then you can now start applying Fibonacci here. So I can come here because the market has taken out this previous high level. Look at it. Because the market has taken out this previous level, I can say this is my B and this is my A. So I can put Fibonacci here and say point A to point B. And then I look at the retracement. Where did it come to? It came to 50% level. So I can put a trade here and say entry here and stop loss at 161.8. And the market did achieve that. Okay, that's one. Then the next one now is going to be that the market breaks above this level, this high. Market breaks above this high and run all the way to the top, right? So we can just say that this is our A, this is our B, and then we put our Fibonacci there all the way to this point, right? And then drag it across, okay? And look at which level has it come to. The market has come back to nearly the 50 level. It didn't hit the 50 level 100%. So there's a chance that the market might still fall down to either 50 or 61.8 level before it continues this rally. So you just need to, well, maybe you took a trade here and it's not favoring you, just close your trade and wait for when the market gets to the next level, either 50 level or 61.8. If it gets to any of this level and then it comes and break a trend line like this one, I got to 50% level. And then it gives you, you do as if you want to move, pull back to that level, created like a double bottom. And then you draw your trend line across the highs. And then the market breaks the trend line. This is a perfect place for you to go. And when you are putting your stop loss should be below the A. According to the MTI shift, you say if the market does not take out the A, the market has no choice than to go your way. And your way in this case is your target is 161.8. Your next target will be 261.8. The market may rally from this place and hit 261.8 and then it pulls back and goes to 361.8. Right? So until it goes to the next, look at the next resistance. Look at the next weekly resistance. It's very far. So if the market is going to go to the next weekly resistance, it's a whole lot of movement. It's going to be hitting this level, this level, this level. Look at, you can see the levels, multiple levels that the market needs to break until it gets here. So this is your, so if you want to go by this, all these eyes are your TPs. So you can count the number of TPs you have. So you can say after this place here, okay, we can call here, if we call here TP, okay, so let's do something, just click this one here. If we call here TP1, and this is TP2, TP3, TP4, TP5, TP6, and TP7. So you have 7 take profits on this trade. And you know, the market will do it. You know why? Because if you compress this chart to weekly chart, it's not a lot of movement, right? Look at the movement. This is the, remember, the market move between support and resistances. So this one that the market identify for you as weekly, they are key levels, very key levels. So it's most likely, and the way this indicator works, so so that you don't get it twisted, the way this indicator works is that it's not all those other indicators that maybe when the market comes and take it out, it will still be there. So if the market comes now, if this market goes all the way to this point and breaks above this level, this resistance will disappear. It will no longer be visible. It will not be there again. I don't know if it's clear. Is it making sense to you guys? Let me hear from you.
Yes, sir, it is making sense. We are following.
Makes
Okay.
sense.
Very good. So now, why am I doing this? I'm doing this because sometimes it is difficult for you to by yourself identify all the support and resistance. Well, for a person like me, it is easy. Maybe because I've been doing it over time, right? But for somebody that is not very vast, you know, in trading, it might take time. All these things that you are seeing now, I can remove everything of this indicator from my chart. I don't need the indicator. I can still identify these levels, okay, and tell you, oh, this is the support, this is the resistance, you know, and then I start targeting those levels. If you remember, one of our model, let me just quickly take you back to that model. Score a point and pull back. Yeah. If you remember this model, look at it. There's what we call score a point and pull back. What does the market do? When the market, this is a market that is going down. The market is creating lower highs, lower high, lower high, lower high, lower high. Now, if this market, and remember, all these lower highs, they are what we call past resistances, just like in this case. Just like in this case now. Here's one we were looking at before. You see all these highs now. These are past resistance, past resistance, past resistance, past resistance. They are all past resistances, right? Now, when the market continue to do that lower high, it will get to a point where the market will come and break the trend line. Okay, the market goes instead of doing another lower high, the market breaks the trend line. When the market breaks the trend line, and this is why we call it score a point. If the market breaks the trend line and stop here, the market may still go down, and this is still a lower high. Okay, the only time it becomes a higher high is when the market breaks above the previous resistance. And whenever it breaks above the previous resistance, we say the bulls have scored a point. In as much as the bulls are not able to break above the previous resistance, the bulls have not scored a point. They will continue to lose. The bears will continue to, the market will continue to favor the bears. But once the bulls, you know, push so hard enough, that is, you have more buyers than sellers entering into the market, and they gain so much momentum to break the trend line. Breaking the trend line is condition number one that the market wants to change direction. It's not an ultimate condition that the market has changed direction. That's condition number one. And that's why, if you look at my first analysis, I talk about the market breaks the trend line, and then I wait for the market to pull to the back of the first bearish and bullish candle that form following each other. Okay. Now, that is my own approach to enter the market without a drawdown. Okay. So, but when the market does this, when it breaks above the previous resistance, that is, the market scores a point, every time the market scores a point, the next thing the market will do is that the market will pull back. That's why it is called scored a point pullback. So first, the market scores this point, pull back. When it pulls back, remember, it didn't pull back below this previous low. Now it now created a higher low. Because of that higher low, the market will now start going up. Okay, the market goes up, it goes up, it goes up, it goes up, stays consistently above the uptrend line. Every of this low becomes a past support until such a time that the market breaks the trend line and also take out the support. Now, if you go through my trading, my explanation on Fibonacci, I say if the market does not take out the A, the market has no choice than to go your way. So if this market is going to change direction, first is going to break the trend line, next is going to take out the A. That will take me into another presentation quickly. Let me just quickly show you here. Maybe this will explain it better for you. The King's Crown, the FS Shift King's Crown. Where is King's Crown? Can somebody see it on my screen? Reversal trading, reversal trading, reversal trading. Yeah, that's it. So I just want to show you the points. Okay. If you remember. Oh, let me use the PDF. This one, maybe this one is clear, right? Okay. So this is the same thing we were talking about just now, right? So this is market, creating lower lows and higher lows, higher lows, higher lows, and the market wants to change direction. So this is talking about the bullish King's Crown. Okay, for the market to reverse, remember the market is doing this movement in an ABCD order. The market creates A, creates B, pulls back to C, extends to D. And like we said, we want to trade C to D, right? So the market creates, every time the market creates A, B, C, D, as soon as it creates D, your C becomes your new A, your B becomes your new B, your D becomes your new B, okay? And the market does that, and I say point number one, the market breaks the trend line. That's point number one. Remember, the market breaks the trend line, but the market has not taken out this place. This is the previous or past resistance. The market will go another step and takes out the A. If the market breaks and closes above the A, or just breaks above the A, you don't really necessarily need to close above it. That's a good sign that the market is going to change direction. And when the market does that, the next thing the market will do is to look for this B on this side. The market is going to look for this B, okay, on this side, which is here. Draw a line on this B here and see that the market will pull back. Score a point, pull back. Score a point, pull back. First, market breaks the trend line. Second, market score a point. Third, the market pulls back. Okay? And then the fifth process is you are now going to draw the uptrend line. Following the pullback, you're now going to connect the low of your D, which was B, and later become a new A, to your pullback, which is now your C, your new C. So this now becomes your new trend line. And you will now see the market, staying on top of this trend line, continuously until such a time where it will do the reverse again and then break and then change direction again. So this is it on a chart. Okay, the market creates A, B, C, and we say D, and then the market comes from D and breaks the trend line. The market proceeds further and takes out the A, and then the market pulls back. We are now targeting this B area, and then the market pulls back to this area. Okay, that's it. If you are aggressive, very, very aggressive, you can actually put a buy trade here at this level, this B level on this other side. You can put your buy. After you put your buy, you put your stop loss below the A, and you will expect this market to rally in your favor. The market will, now when you put your, look and see, this is a Fibonacci 38.2. So the market will naturally go to 161.8 and see the market get there. It is not magic. It is not rocket science. It is just simple knowledge. Okay? Simple knowledge. Now I'm talking to you like this because all of you here, you probably have taken my class in the past. I know I have some persons that are brand new that may not, flow very easily, but don't worry, there will be a time again for you to get the class from scratch. But just to refresh the mind of the traders that this is what is happening, right? So the market came down to C, which is your previous B here, and then the market rally. Can you see the big candlestick that came from that place? Okay, this is Euro USD, so it's not. If you look at the date, you know when it happened. If you go to the market, you will see it. Okay, this is 1 hour chart. Okay, so you draw your trend line again, and then these are the 5-step process. Okay, these are the 5-step process, and it's very critical that you understand this 5-step process in the market changing direction. So that's for a bullish crown. That is the market changing from bearish to bullish. And then we also have 6 conditions, because this is where people get it wrong. Now that I've done this now, everybody will go to their chart and be looking for it to happen exactly like this. It will not happen exactly like this. Now, these are the possible 6 option cases that will happen. There are cases where your B on this end will coincide with your C on this end at almost the same level. Okay. This is one of the most common, most appearing. Okay. And then there are cases where this will be lower than this. There are cases where this will be higher than this. There are cases where this and this will be very shallow. And then there are cases where this is 2 cases combined. The first one is 5, where this one is lower, and this one is way, way shallower. And then this one is deeper, and this one is way, way shallower. So this is what you will be looking for. So don't go and start looking for ID situation in the market, because you will not see ID situation. Okay? These are the possible things that you will see. But watch out for this one, because this is one of the most occurring. And you can see where the market breaks the trend line, it's exactly where the market pulls back to before the market takes off. So these are the 6 conditions, okay? So that's it. I mean, it's straightforward. We can repeat the same thing for a bearish crown. The market goes up, takes out the A, breaks the trend line, takes out the A, pull back to B, and then look for C on the other side, which is here. And then when the market forms C, you are ready to sell. Draw the trend line, and the market starts trading below this trend line. Okay? You look at it on a real life market. This is A, this is B, this is C. The market takes out the trend line. The market comes down all the way and takes out the A, and then the market pulls back to the B. Okay? And then from there, see what the market does. Massive sell. Right? So the same way, we also have that 6 condition. And then in some cases, you may see some fictitious crown. Okay. Now that's where you have what we call sub A, sub B, sub C, sub D. Okay, so I don't know how many of you have heard of Elliott wave before. Elliott wave. Let me just see if I can quickly do something. I'll just take you back to my early days of Forex, 2017. Elliott wave. I want to see. This is the first set of models I created when I started this market trading. Okay, so Elliott wave. So these are the conditions for Elliott wave. I want to see where are the okay, right here. So these are the Elliott wave. Okay. So with 5 patterns. So you have wave 1, wave 2, wave 3, wave 4, wave 5. Okay, these are the 5 waves. Now, there are conditions. You see this wave 3 cannot go below wave 1. Okay, this wave 3, sorry, wave 4 cannot go below wave 1. Okay. Now, this is the same thing. Now, in this Elliott wave, let me show you the complicated one. Yeah, this one. So you see, the whole of this now from this point to this point is wave 1. But inside wave 1, I have sub wave 1, sub wave 2, sub wave 3, sub wave 4, sub wave 5, which is the same thing as sub A, sub B, sub C, sub D. Okay. Now, sometimes this one is looking very complicated. When you try to teach people this one, you end up confusing them more. But these are the conditions for the Elliott wave. Okay. You see wave 4. Wave 4 can never overlap with 1. Okay. So if wave 4 overlap with 1, the Elliott wave is invalidated. And once you get to wave 5, whenever you hit wave 5, the market must create A, B, C pattern. Okay. When you get to wave 5. So this whole thing that you are saying is still what is being summarized, okay, in this lecture. So this movement like this from here, A, B, C, D, this A, B, C, D, A, B, C, D, it might not just be a straight line like this for your information. It's going to come in this format: sub A, sub B, sub C, sub D, sub A, sub B, sub C, sub D. You understand? So you're going to see something like this. Okay. So now, when this sub A, sub B, sub C, sub D, and then you draw a trend line on this sub A, and the market breaks this one and take out this one, you say, oh, the market has changed direction. You will be taken by surprise because this market will end up going farther up than you thought, because this is the main trend line. This trend line is an inner trend line that is broken. It is not the main trend line. So the market has ideally not broken the main trend line. See the main trend line. Look at when the main trend line get broken. Okay. This is the place where the main trend line get broken. But now, for this break to be valid, it needs to take out this A. If it doesn't take out this A, it means that the bears have not scored the point. So they need to score a point. Bam. As soon as they score the point, yes. Now you can now talk of market pulling back. Okay. All right. So I don't know if it's clear to you guys. Or is it looking zigzagging in your eyes? Okay. Yes, you can talk to me. Let's go. If you have questions, you can ask. Okay, so in the answers of no question, let's continue. So as a trader, you want to, number one, you want to trade from a key level. Okay. Sorry, 1 minute. Let me take this call. Yes, Emeka? Yeah. Okay. It's all right, no problem. Okay. It's all right, no problem. Thanks. All right. Okay. So you want to reference a key level. Look at this market, this NZD USD. You know, some persons will be in the 1 hour chart and be, fumbling around, not knowing the plan of what this guy wants to do. But can you see that this market sold from this up here? This is a resistance, and it came down all the way to this point here, right? And this is a support. The market has tested the support once, tested it twice, and then before this massive rally that you are seeing. Now, between this point and this point and this point, a lot has happened in the lower time frame. A lot. This candlestick alone that you see here is a trend on the lower time frame. This candlestick is a trend. This one is a massive trend. And this is a continuation of the massive trend. So you want to be able to see this level. You want to be able to see this level. You want to be able to see this level. I want to be able to see this level. So ideally, you want to see the market reaction when the market comes back to this level. That's what you want to see. This is also a level here, so don't miss it. Yeah, it's a level. I hope you can see that I'm drawing it on the candle body, not the wick. Okay, because the wick could be deceptive. The wick is actually creating for you a zone, a rejection zone. That's what the wick is creating for you. The true level is actually the candle body. Okay, so you see how this market came down from here. This is a period of how many weeks from here to here? That's about 15 weeks. That's a long time. For 7,000, how many pips? This 790 something pips. Almost 800 pips. Just 800 pips. From this point to this point. That's a whole lot of money, right? For somebody that, will take those trades with 1 lot or 4 lots, like Joshua. By then you would have broken record. Okay, so please, you need to watch out for the key levels. So like now, this market is going back now, right? Now, as this market is going back, you can target somewhere like here, okay? That is previous support level. It will become a resistance level. You can target here. So if you look at our training, we say okay, let's even take it from a distance and look at this place. You can see how well the market has actually come to test this place. They hit it here, came here. So like 3 times now. Okay. So if you look at this market, coming down all the way from this top here, okay. If you come back to our training, we said any support, any resistance, if I'm standing, look at it. If I'm standing and facing the market, if I'm standing here, we say any support or resistance that we cannot see with our eyes. So if I compress this thing now, you agree with me that if you are standing here, you can see this highest point. You can see this highest point. Yeah, you can see it from here if you are standing here. But you cannot see here because these candles are covering this, right? These candles are covering this previous support and resistance. So we are saying that these ones that you are seeing from the front of the market, these levels, these key levels. So let me use the body now. These are key levels. Key levels. Anyone that you see like all this one and this one, you see the market has covered this one. But let me move this one up a little bit. Okay. And then this one. Before this last one. So if you are here now, where this market is now, right now, let me compress it more so that you can see. Okay. If you are here right now, your key levels that you are looking at to the top are this one. This is the first one. And then let's say this is the second one. Then the third one, the fourth one, the fifth one, the sixth one, the seventh one, the eighth one, the ninth one. Okay, before where we are. And then to the down part, we have this one. And of course, we have 1, 2, 3 that are very close, followed by this one, followed by this one. Okay, so to the downside, we have 1, 2, 3 level. Then to the upside, we have almost 9 levels. Okay, so the market can go down, the market can go up. So take note. But for the market to do any of the above, the market will need to, from where it is right now, either the market will come down and take out this one and then retest, or the market will go up and take out this one and retest. So if we draw a trend line from here, let's take from this high and draw a trend line, come down all the way to this point, and then pick another trend line from this point, come down all the way to this point, right? Now this is the trend line. Okay, this is the trend line. If the market breaks the trend line, from what we have discussed, we say the market need to take out this level, need to come break the trend line, then come and break this level. Then when it breaks this level, we expect that the market will now pull back. Okay, pull back. When the market pulls back, that's when we now start thinking of continuation trade. But most times, the challenge we have is we can have this market like this, and maybe we just flip to a lower time frame. Well, in this case, the market has done a massive rally, right? And this rally is coming from the fact that this place on the weekly is a big support. Let's put that our indicator and see what it will give to us. Let me put the mean reversion. This is empty for now. So I go to market, look for mean reversion, double click on it. Now it's not working. It's not working, meaning that I need to install it. So I go back to my this thing, go back, my purchase, I look for mean reversion. Look at it here. Mean reversion. I have 5 activations. Say open. Now it cannot open because I need to install it first. So what I will do, I will come here and remove this one from the MT4. So when I remove it from the MT4, I close this MT4 and open it again. Okay, open it again. And then I come back to my market, come back to my purchase. I look for mean reversion again. Mean reversion. Can you see now it has changed to product is purchased but not downloaded yet. So when I click install, okay, you see that now it's installing. Now it has installed. So this same product that did not work, now when I click on it, now it will work. Can you see that? Okay. So now I can apply this. The same thing, I'll come and turn off the white background. I don't need the white background. I can apply this. Let me call it weekly so that when I switch, it will still hold it for me. So look at it. So now look at the weekly levels on this one. These are the key weekly levels. So now if I move this weekly level, if I move it to, so you can see it started from here, because this indicator works with the week. Okay, so it started from this bottom, but you can see after this bottom, this level has been touched plenty times. Okay, even up to this one. Okay, where it is now. Now, if I switch this to daily, you can see that level. If I switch it to 4 hour, you can see the coverage of the level is so big. Okay, so now that you are inside a demand zone, a weekly demand zone, if this weekly, for me, this zone is too wide, right? This zone, and the reason why this zone is wide is because of this bullish candle. Look at it. So usually this zone is created by the other block candle. So look at it. It's because of this candle, this bullish candle, which is the other block. So it catch the bottom of the wick and the top of the other block candle to give you the zone. Okay. Now, this can also be the zone. All the way to the bottom of this wick here can also be the zone. Okay, this is a wider zone. Okay, so for me, this zone is too wide. So if I look at this zone, all this movement that you see here, this is the first time the market is entering back into this zone here. Okay, so let's change this to daily and see what it gives to us. So if we come here and say daily chart, daily level. Can you see the daily level? You can see that it tallies with the line that I drew. Can you see that line? Look at it. It tallies with the line. Because if I switch this market to a daily chart, you will see the candle that brings about that level. It's too far off, so let's compress it a little bit. Okay, look at it. This candle here that brought about this level. So you see, on one instance, the market came back into this level, push out of this level. You can actually make money trading out of this level. The market pushed back into this level again, and then it's pushing out of the level again now. You can also make money while the market is living here. So you may also want to be aggressive here and say, give me H4 level while I'm on the daily chart. Say, give me H4 level, and then the market shows you the H4 level. Look at the H4 level. It's very fresh. Okay. You see, the market just formed an H4 level in this. So for your information, you can add 2. I can put 2 of this. For instance, I can do this. I can say this one is daily, right? I can come and say this one is daily chart. On top of this daily chart, I can come here and put another mean reversion and call it 4-hour chart. Both of them will show. Oh no, I forgot to change my white background. Okay, but then both of them will be showing, both the daily and the 4-hour will be showing the same time for you. So you can actually see a 4-hour support in a daily support, and you can start trading it. You can trade a 4-hour support in favor of a daily support. You can trade a 4-hour resistance in favor of it. Like take this one for instance. This is a daily. Look at it. You can see D1. D1 means this is daily. And then right below this D1, the market forms an H4 support for you. So you can start trading this support in favor of this daily. And this is how this market came down all the way to this point. Before we're not talking of this level now. You understand? So sometimes you might not really 100% rely on your head alone okay, to be able to figure out some of these key levels. So you need tools, and that's why I started with the explanation of tools. So if you have the time, there are plenty free ones. If you go back to that website, yeah, there are plenty free. There are plenty free indicators, right? And expert advisors. So if you come here and click on free, it will display free ones for you. This is look at this one. This one is supply and demand order block indicator. So if you click on the indicator, it will show you a preview of the overview of the indicator and how the indicator works. Let me see this one. This one is not. Let me pull this one out. I don't like the way this one is displaying. This one is not showing very well. Let me see if I have another one that's similar. Close this, close this. Let's see this. Let's see this one first. I don't know how this one works, but let's just click on it and see. So you see, it show you something like this. This will show you something like this. So if you download this indicator now, put on your computer, you are going to be seeing something like this on your chart. Okay. So if you understand how the indicator works, for me, I think all the indicators are good. It's just a function of you understanding how well it works. Okay. If it works fine, you can build a strategy around it. Okay. So try as much as possible to assist your trading with the help of indicators. Okay, that will also save you some stress. And then I did expose you guys to some premium content, okay, online. So it's not everything you pay for. You can go online and Forex videos. Okay. So yeah, I told you that of all these websites, my most used and the best, I think the best for me is this one, White Street. They have a lot of videos, a lot of videos. If you go back to White Street and watch all their videos, I can guarantee you that you will not need another lecture to trade this market. You will not need a separate lecture. Everything about chart pattern, you will understand. Everything about this Forex market, you understand it if you just go and watch all these videos. I think these videos, they are, let me see how many they are. Let's see, downloads, videos, White Street, YouTube videos. There are about 49 videos there, okay, in that White Street. So 49 videos. So you can imagine I took my time to download all the videos from the website. Go and try it. It works. All these videos, there are total of 49 videos. So if you just if you just come here and say videos, you can see all the videos. Okay, from the very beginning, when they started the very first video, starting from here, 6 years ago, and they started uploading videos. You can watch all these videos, and trust me, it will change the way you look at the market. Now, one thing you also need to know is, you see, in my workplace, I'm very busy. You know, they talk of busy, I'm really, really busy. But for me, I've come to look at it from the point of having to understand something that works. Okay? You know that this thing works, right? And you know that there's nothing good that comes free or cheap. It's either you are investing your time or you are investing your money. You have to invest something in order for you to get good results. Okay. So if a lot of people, because we are working, we say we cannot sit down in a class. We cannot go and watch videos. We cannot, I mean, that you cannot do. You also cannot understand it. Do you understand? But if you take your time If you take your time and go and sit down, watch these videos. Like for instance, this one is 1 hour, 17 minutes. This one is 14 minutes. This one is 15 minutes. This one is 45 minutes. This one is 22 minutes, 12 minutes. You can see it's not just these guys, it's just few of their videos that are long. Few of their videos that are long. This one is they are very, very in-depth in their explanation. So I want to charge everyone in this group to go and watch all these videos. And then the next one after that for me is Traders DNA. Traders DNA. This one. The beautiful thing about this one is that number one, their videos are very short. Very short. Okay. And then they just go straight to the point. So almost all the videos that you see here, they are strategy videos. It's a lot. Let me see how many I've downloaded. Traders DNA. Traders DNA. I've downloaded 178 videos from that website. And that's not the end. This is the EMA Akianshi. This is the trading strategy for top 5%. So the last time I downloaded, it's been a while. So they must have added so much from the last time I downloaded. Let me see where I stopped. EMA. Six months ago, 6 months ago, 6 months ago. Let me see that. EMA Akianshi. Okay. You can see they've added so much since the last time I downloaded. Because these guys they add video like almost every time. It shows up to 10 months. Well, I can't seem to find it. But then it looks like they've added so much since the last time I downloaded. It's supposed to be one of these series, EMA something, EMA Akianshi. I'm not seeing EMA Akianshi. EMA Akianshi. What's this place? EMA CCM. I think we're not sure you trust me about that. I probably so. Well, I can't find it, but so just try as much as possible. I hope you are taking down this site because it's very important. It's very, very critical. This one, the beautiful thing about this is they will tell you what you need to do, and they will show you your entry, your stop, your exit. Okay, and that will help you a lot. Okay, it's just plug and play. Okay, and then after this one, the next one for me is the trading channel. The trading channel. This guy has evolved over time. I know when it started, it's been a long time that I'm following this guy. Now he has upgraded his videos. His videos now are very, very worthwhile. So you need to take time. His own is so much. There's so much of his video. I can't even remember where I stopped when I was downloading. I know I've downloaded some. The trading channel. Okay. I've also done a paid program. I did a course from this guy. It's called the EAP training course. Yeah. That course is $1,000. I paid $1,000. Okay, for this course. I also did one with this guy too. So there are several courses that I've done, along the line. So it's very important. All these ones now, go to this one. You don't need to pay money. They are free. They are free. And trust me, if you understand this guy, in fact, I call him the master of support and resistance. This guy is very good at explaining the concept of support and resistances. So if you look at this chart, that is displaying here now. Can you see all the previous supports that the market break and came back to test for the market to sell? You can see it. You see the support, you see the resistance, and then you see the one that support and resistance. So on the left side is support, on the right side it becomes resistance. And then it has to sell to the next support, which is what you are seeing here. So this is, if you open this video now,
if they came out with a new rule that said I could only trade one trading strategy for the rest of my trading career, then the market structure trading strategy you're going to learn in this video would be the one I would choose. Market structure can be one of the most powerful tools you have in your trading arsenal. But if you use it incorrectly, if you don't know how to identify swing lows and swing highs correctly, or you don't know how to identify the most accurate levels of structure to trade around, or you just simply don't know how to create profitable trading opportunities around market structure, then they're going to be completely useless and could even cause detrimental losses into your account. So for that reason, in this video, I'm going to be sharing with you my top 3 market structure trading strategies. We'll go all the way from the basics of identifying swing highs and swing lows correctly to identifying the proper levels to trade around and to creating profitable trading opportunities around those levels. So if this is something you've been struggling with, then this video is for you. And if that sounds
okay, I'm sure that sounds interesting to you. So if you, just go to the guy's website, go to the guy's channel on YouTube, and see how much knowledge you can gain, by watching his videos. It's very most of the things I do today, a lot of them I got from, some of these videos online. And then, secondly, even though I watch all these videos, I also take my time to look, like I was explaining something to you. Let me show you something. I want to show you something, and that's that strategy I was telling you just now. I want to show you, yes, MT5. And then let's just put the normal charts. Okay. So weekly chart. Then let's say boom 500. Yeah, boom 500. There was something interesting here. Beautiful. Look at this boom 500. Look at this boom 500. I explained something to you just now. I said when the market wants to change direction, right? Remember, this is weekly chart. So on weekly chart, you see each of this week, they are like support and resistance level on the smaller chart. Okay, they are key levels on the smaller chart because this is a big chart. So what I'm looking at is this. Look at this blue and this maroon that you are seeing on the candle. The real candle is this green candle and the black. That's the real candle. This is Akianshi, this blue and this maroon color, the Akianshi. Now, over time, I've come to realize that when the market, I told you that when the market is selling, alternate candles will be closing above the opening of the previous candle. You take, for instance, this place now. The market is selling from here. This candle closes below the opening of the previous candle. It doesn't matter whether it's a bullish candle or it's a bearish candle. This is the opening of the previous candle. This black one closes below the opening of this one. This one closes below the opening of this one. This one closes below the opening of this one. And that it has continued until it gets here now. Even this bullish candle, it closes below the opening of this one. This small bearish candle still closes below the opening of this bullish. Now, if this bullish candle eventually closes above the opening of this bearish, that signifies that the market is going to change direction, that a change is coming, a change is coming. But what I have come to learn over time is when the market did this massive move to the upside and the market wants to sell based on Ikeanshi, is I stop on the first two candles that give me a bearish candle and then a bullish candle. And I say, go to the back of the bearish candle and draw a line there. Draw a line here. Draw a line here. Very simple. Go to the back of the bullish candle and draw a line here on top of the Ikeanshi. Look at these two Ikeanshi and look at how this market pulls back into this level, these two Ikeanshi. And then he gave me a doji candlestick. This is a bearish doji candlestick. That is a candle that closes very close to the opening of the candle. So you can see the long wick. At the close of this candle, just take a sell. This market that you are seeing, and this sell that you are seeing, that came down all the way like this, all this sell, is because of this action that happened here. Because of this action. That's why this thing happened. This continuation that you are seeing here is also the same reason. The back of this guy and the back of this guy, you see the market pulls back into it and then it gave you a bearish candlestick to sell. Just sell this market. So right here now, what could happen next is that this market can come back to this place and this place in between these two candlesticks and then gives you a fantastic sell candle. If you want to be very, very aggressive, you can switch to a lower time frame and see this change that happens here now. If you take this line and go to okay, let's do something. Let's go to a lower candle. Let's take this line and this line and go to a lower time frame. Yeah. So let's mark here this line. So when you switch this market now to daily chart, okay, so let's just compress it down. Look at it on daily chart. Okay. See your daily chart. See the up of your daily chart. And where the market starts coming and breaking and breaking. This is a candlestick. Look at this low. Look at this low that goes to the highest point. Between this low that goes to the highest point and the highest point, right? The market came down. Look at the candlestick that breaks that low on the daily chart. Is this one? I said put a line here. Put a line here on this bullish. In between these two candlesticks, watch what the market will do. The market pulls back into this space. And then it gave you this sell candle. This sell candle that you are seeing, all this movement here, is what forms this doji on the weekly chart. This doji you are seeing. Everything you see that happens on this daily here, it what gave right to that doji. Okay? So on the daily chart, you would have entered this market very early from here. In the same way, if you switch it to the 4-hour chart, you will even see a better entry. So let's compress it further. See 4-hour chart. Look at where, let's even assume that you enter on the daily. You would have been on this sell from here until today. How do you like that kind of entry? I like that kind of entry. It's a massive one. You sell here, you put your stop loss above this high. I don't know what ratio of risk to reward is this, but I know it will be up to like 1:7 or 1:10. That's a lot. So we need to move away from the rush, right? Everybody wants to make the money, very early in the day. Yes, it's fine. But sometimes you need to look at the risk that is involved in trying to do it that way. If the risk, and now look at this one now, look at this one. You see, maybe after another 4, 5, 10 weeks, I will bring you back to this chart. See this one. The market just break a key level, and this is the candle that breaks the key level. After breaking the key level, here and here, with these two candles, this is the first stop after breaking the key level. I'm telling you now that because of this action, this market will pull back to the back of these two Ikeanshi behind here. When it pull back to this area, watch out for a candlestick formation from either daily or 4-hour or weekly chart. Any of the candlestick formation that you see, you can take the trade and put your stop loss above the next Ikeanshi that is higher than that one. If I want to take the trade from here, I want to put my stop loss above this Ikeanshi. Remember, Ikeanshi, the way it works, look at this. Every Ikeanshi open 50% of the previous Ikeanshi. So this Ikeanshi open at 50% of this one. This one opens at 50% of this one. This one open at 50% of this. So if you look at it, you can use your previous Ikeanshi as your stop loss. So those of you that are looking for tight stop loss, Ikeanshi is the way to go. Look at all this candle. You can see that this one did not come back to this one. This one did not come back to this one. This one did not come back to this one. Neither did this one come back to this one. It's very difficult for you to see Ikeanshi break below the opening of the previous one. It is very, very rare. It only happens in a very, erratic market. Ideally, in fact, in the world, by rating, Ikeanshi is the best trend following indicator in the whole world. Ikeanshi. So if you want to look for something to follow the trend, go and look for Ikeanshi. And that's what I'm showing you now. Okay. So if you even though this market is moving, this market is buying, you can actually jump into this market here. Maybe at the close of this bearish candle, you just say buy. You are confident enough to come and put your stop loss below this previous Ikeanshi low. Put your stop loss here. It will be very difficult for this market to come back in as much as this market is trending up. It will be very difficult for this market to come down below this previous Ikeanshi. Before it does that, you would have seen a signal that the market is changing direction. And usually when the market does that, it's actually direction change. So one way you can change your direction in this market, let me make this Ikeanshi big. You go to the last Ikeanshi to the top, which is this one, okay? And then you watch when the market breaks it. The market comes down, breaks it. That candlestick that breaks it, sometimes, like in this case, exactly the candlestick that breaks this Ikeanshi is the one that forms the stop. Remember, bearish followed by bullish is actually a stop. It's like a block. It's like a support. So bullish followed by bearish is a resistance. Like for instance, this is a bullish candle. immediately followed by a bearish candle. This place, I can say this is a resistance, these two candles, right? But because the pressure of this market is bullish, that's why this market will not change direction here. So this market now, the pressure has been bullish, 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 and then eventually it came and break below this Ikeanshi. The market direction has changed. You now start looking for the market in favor of the red Ikeanshi. Okay, this one that came here now, watch this one. This one that came here and started going up. Look at all this Ikeanshi. The market did not break above any of them. Look at them until it gets to this point. Look at the last candle, this one. It is when the market breaks above this one. This is when you start talking about changing direction that the market is going to buy or sell. So you can see this. You can use your weekly. You can use your weekly chart to see the long-term direction. Like in this case now, even if I decide to change this chart to another chart, let's say volatility 75. Okay, look at volatility 75. Watch this. See the market. See how the market breaks above this Ikeanshi here. This is what causes the change in direction. This is what causes the change in direction, right? And then you see how the market is respecting it and going up. Okay, you can see how effective it is on the weekly chart. Now, if you go to a smaller time frame, maybe daily, yes, can also be good, but it will be more erratic. So it's better for you to let me see. This is messing up this thing. I need to stop the share and share it again. Let me see. Let me stop the share and share it again. All right. So for me, I prefer either the weekly or the monthly. Okay. Either of these two will give you a more clearer direction. Okay. Any of this will give you a more clearer direction. Look at how all this Ikeanshi from where are you seeing this red on monthly? You see how well all this monthly obeyed until now. Look at it now that the market breaks above this one, this Ikeanshi, this one. And then the market will now start buying. Okay. So sometimes where this one is changing may be too far for you to take the trade because its monthly chart is too big. So you want to switch to weekly or you want to switch to daily. Like for instance, if I'm looking at this weekly, so if I mark these two candles, as my stop candle, let's say you will come here and mark these two candles as your stop candle. Okay, let's say you come here, I want to show you something now. And you mark these two candles as your first stop. And say there's a possibility that the market will change direction. If you switch to your daily chart, okay, look at the place where you mark. Can you see that from the place where you mark, the market still continues to come down? It still continues to come down. Look at the mark. From here, there was no reversal until the market got here. And then it gives you the reversal here by breaking this point. Okay. Now, if you are on the daily, you would have seen that this change is happening here. If you are on the 4-hour, you will see it even faster. Right? Look at the 4-hour. You would have seen this change, coming from somewhere here. Coming from here. You see? Market did all this and then break here, and then you start buying from here. You would have seen the change from there. So you can see where it is on the monthly, on the weekly, on the daily. Okay. And then on the 4 hour, you see with 4 hour, you would have entered the trade very early. Okay. And then for weekly, on the weekly, you just see, oh, it's now the weekly is breaking its own, which is here. See the weekly. So if you move this, if we switch this 3 chart now to 4 hour, you can see the 3 entries. See the 4 hour entry, see the daily entry, see the weekly entry. You see how late the weekly entry is, but it's still okay. Okay. And from this weekly entry, that's where the market has did all this movement to the upside. And you see this guy that you are seeing, volatility 75, is one of the highest money spinning assets in Deriv. This is Deriv, Deriv.com. So Deriv.com is is a broker. It's a UK broker that offers both volatility indices and Forex all the same. So if you come here, if you come to your market watch, you see everything they offer here, right? So you have all the boom and crash indices. You have, so if you even if you put here, you see all the categories. You have Forex, you have commodities, you have cryptos, tactical indices. This one is new. Range indices, step indices. So they've all these things that you are seeing now. I started using these people since 2017, right? And I can tell you, in fact, I've made a lot of money from these guys. A lot of money from these guys. Now, these guys, the good thing about them is that they are super fast. If you make money, you withdraw. It's fantastic. I use online era on this. If I want to withdraw money from these guys, I withdraw straight to online era, and then online era will pay to my account directly. So it's super fast. And in fact, if by the time you place your withdrawal in online era, in 2-3 minutes, the money is already in your account. Okay. So they are very good. The good thing why I like them is that they've grown to that level that they've been able to combine both your Forex pair, your spot metals, your energies, your volatility. Usually, you used to have an account for only volatility indices, and then they used to have an account for Forex. So if you go to their portal, like for instance, if you go to their, let me see if this will open. If you go to their portal, uh, you will see the types of accounts. So over the years, they have evolved. Since 2017 that I'm using them to today, there has been a lot of changes, right? So yeah, you can see the MT5 account. Okay, these are all the platforms that they use to trade. Okay, yeah, now they used to have, look at this one, financials. This is only Forex. Financial STP. STP means straight through processing. That is, they won't hold your trade on their server. As you are placing the trade, is going straight into the Forex market. But this one, that is not STP, as you are placing the trade, they will hold your trade in their server, and it will be up to them to switch it to the Forex market or not. The thing is that if you hold your trade in their server, and for some reason you trade and you make loss, that money goes to them directly. But if you make profit, they will have to pay you with their money. So usually they don't keep professional traders on their server. If they know that you are amateur, they can keep you on their server and they'll be making money from you. But if they know that you are a professional trader, they will not waste time. They will push your trade into the Forex market, so that when you make money, the money will not come from their purse. It will come from the Forex market to them for them to pay you. Okay, so this is how their portal look like. Okay, this is not the way it used to be. It has evolved over time, and now they have everything in one place. Okay, that you can access. So it's a beautiful broker. So if you don't have an account with them, try and have an account with them. You can just have an account with them, and that's all. You may not need to have any other account, because now you have access to everything. These are the boom and crash, the volatilities, everything in one account. Okay. All right. Let me see. I think we have shoot past our 2 hours. Okay. So let me take questions from you guys. Let me hear from you guys. Let not be that I'm the only one talking.
Yeah, sorry, Patrick. What's the name of the one you said we should try to have account with? What's the name, please?
Deriv.com.
Okay, Derry.
DARIV. Okay. Questions? Anything that you think that we can just look quickly in the next 10 minutes before we shut down? I'm traveling to Lagos tomorrow first, and so I need to catch some sleep.
Hello, Prof.
Yeah, Joshua.
I just wanted to ask. There is something I'm still trying to figure out. I know you've talked about it before. When you have is it the Doji Star? Is it Doji Star? Or is it Doji Star or Shooting Star? The one that you have the body very thin and the
Doji.
wick long, like a
Doji.
cross.
The Doji.
Yes. When you have two of them, you have a bullish and a bearish doji star.
Yeah.
Hmm? Sometimes it's a bit confusing because it's more like an indeterminate candle, isn't it?
Okay, let me quickly just throw that on that for you. So quickly, I'll just open one of the slides. So we talked about trading the Japanese candlestick in our training, right? Now, when it comes
Yeah.
to trading the Japanese candlestick, we talk about these are indecision candlestick, and these are decision candlestick.
That's it.
Right? Now,
Yeah.
look at this bullish doji, and look at the bearish doji. Look at the one that is indecision. The one that is indecision, the wick to the top and the wick to the down, they are almost of the same length. The wick of the
Okay.
doji start to the top and the wick to the down, they are almost of the same. But the decision one, they are not. The bullish one has a long wick to the downside, and the bearish one has a long wick to the upside. And I did explain this. I said what it means is that if this is a 1 hour candle, for instance, it means that over a period of 1 hour, this market moved all the way down. That is bearish, the bears, they push the market all the way down, but somehow they couldn't keep the market down because there was an injection of buyers than sellers in the market. More buyers started entering the market. And in the process of time, let's say this whole action of this market coming back up can even happen in 1 minute, in 1 second. Maybe the last minute of the candle to close. It can happen. It can happen 30 minutes before the time. It can happen 2 minutes before the time. So let's say the market, this candlestick is 1 hour and it has already done 57 minutes. In the last 3 minutes, the market, you can just see this surge of buyers that pushes the candle all the way, because the idea is to actually push it above the opening point. But some are very close to the opening point, the time exhausted. That 1 hour exhausted. So the candle will close as a doji candle, and the next candle that will follow will be a massive candle that continues to the upside.
Okay.
Because the
But
pressure
sometimes,
is the downside.
if the next kind that happens, it tries to aggressively go in the upside, which you just said, and the forces, the bearish now pulls it back again aggressively. So
Okay,
there is still the high chance that
that is on the ground that is appearing in a supply zone. If you see this
okay.
in a supply zone, remember a supply zone have more sellers than buyers. It is
Oh,
more
yeah.
more effective when it's coming from a demand zone. Do you
Okay,
understand?
okay.
When it's coming from a design, like if I go down this slide, for instance, look at this slide. This is Dragonfly Doji. You see how the market came down and see the candle that followed, a massive bearish candle. This is happening like this because this area is a supply zone, it's a resistance zone.
Okay.
Look at this one. See how it drives the market up because this area, you can see this place is a demand zone. You can see this strong rejection. From this week to this place here is a zone. It's a buyer zone where you have more buyers than sellers.
Yeah.
Okay, but if you see this in a demand zone, you might be tempted to want to sell and then the market goes against you. If you see
Yeah.
a supply zone, you might be tempted to want to sell and the market to go buy and the market to go against you. So you just need to watch out where it's coming from. And how do you do that? By looking back into the zone that you are coming from. You see, like this, take for instance, this NZD that we looked at while we were doing our discussion. If you compare this NZD USD on the weekly chart, you can see that it's a very big demand zone. Look at the first time the market hit this zone. And then
Yeah.
it came back again and hit this zone here. And then again, the third time, it hit this zone. If you see a dragonfly doji candlestick in this area, it will move the market massively to the upside.
Okay.
You understand? And if you look at this one, let me see if it's a doji. Let me see a doji that. Okay, that's not what I'm looking for. Okay, I didn't see any good one in this area. But when you see it, if you see like this one and look at this one, can you
Yeah.
see it's coming from a perfect, look at this, supply zone that turns to resistance. This is a support that is now resistance. The market came and then it gave you this doji sign. Look at the next candle, a massive bearish candle.
Okay. What about if we have two indecision candles? One is bearish, one is bullish.
It doesn't matter. Indecision is indecision. The
So you
color,
just have to wait and
yes,
see how it goes.
you just have to wait, yes.
Okay.
Indecision doesn't matter whether it's a bullish or whether it's bearish. The underlying fact is that it's an indecision candle. So it's not going to move the market to either the upside or the downside.
Okay. Okay. Thank you so much, bro. That's something I needed to get some clarification because this candlesticks are working wonders.
Yeah. Okay. Any other person with a question? All right. So, oh, this, I didn't know NEPA people have taken this light. Okay, let me quickly switch this. Can you guys hear me?
Yes, we can hear you.
Yes, we can hear you loud and clear.
Okay. So I mean, basically, just to wrap up, as you are trading this week, just try to put what we have discussed into consideration and try to see how you can manage it. Just try to make sure that you are able to identify. You see, anytime the market, say for instance, this is a level, right? From anywhere the market moves away from is a level. This from the fact that the market got here and came down, you can mark this place as a level. For the fact that the market got here and came down, you can mark it as a level. The same thing here, you can mark it as a level. So anytime the market comes back to that level, watch out for what the market will do. Like in this case, this is a level, the market came back to this level. Okay. When the market comes back to a level and the market is unable to close below the level, maybe the wick of the candle just touches the previous body of the previous level. That's what we call a counter trend. Counter trend means that the market has rejected, that movement in that direction. So you need to watch out for a formation, a candlestick pattern. Like in this case, this is a bearish engulfing candle that came from this zone. So you can even put these two, say, oh, there are two zones here. Ideally you would have said that, oh, this market has broken above this zone. Okay. It has broken above the body, but it hasn't taken out the wick, right? So it's still within the zone. And then the next thing you see a bearish candle coming from that zone. And the zone is actually a supply zone. So what are you going to do? You sell. And that's how this market came down all the way and came down to the next zone here, next one. So it passes through this one, it passes through this one, it passes through this one. So if you want to count the test of TP, if you sell from here, this is TP1, this is TP2, and this last one is TP3. Call Richard on the gen. Okay. This is TP1, this is TP2, and this is TP3, and the market nicely hits all those three TPs and then is doing a reversal. Now in this reversal now that is happening, you can say your TP1 is this top here. Your TP1 is this top here. So if the market comes all the way like this, it may go all the way to go and hit that TP1. And if you hit that TP1, it goes above it, it goes to TP2, it goes to TP3. Off the heater.
Prof, sorry to one last question, please.
Yeah.
This Trump trade war has made me see something I still don't understand, what it is, but I'm sure you must have seen it over the years. Is where the chart does. There's this erratic movement that is so crazy. You just keep going up and down, up and down, up and down, up and down, as in so fast.
Yeah.
I don't understand. Why does that happen? Especially when there is in a major news, all of a sudden you just see the chart going haywire. Up, down, up, down, up, down, up, down. What are you expected to do if you're in the market?
So I mean, for the market, the market is a, how will I put it? It's a very big ocean, right? And then there are major players and there are minor players. So the likes of Trump, I mean, being the president of the US, most of his speech, most of his discussions and decisions, they have serious weight in the market. So if you I don't know, maybe I need to do a class on that. So if you look at fundamental announcement, there are different types of fundamental announcement, and there's a market response for each of the fundamental announcement. Okay, and then you look at every fundamental announcement has a frequency, okay, of occurrence, and this is something that you already know. So what normally happens if you have a Bollinger Band on your chart? A Bollinger Band will give you a clue to what is coming, an idea. So if you go to trend and look for Bollinger Band and just apply it to your chart like this, okay? So what the Bollinger Band usually will do, so let me go to say 1 hour chart. Okay, what the Bollinger is that it will, whenever there's going to be a key fundamental announcement, okay, the Bollinger Band will start it will create like a what do you call it? Like a boundary for you, okay, where you have like an upper zone and a lower zone, okay. So just like a range. So let's see. Let me see if we can see a good one. That happened. I want to show you an example and then what follows after that. Let's see H4. I'm sorry. Let's use a lower time frame because it will happen higher. So a lower time frame will give it to you better. So before the news is read or before the value of the figure of the news are released, what the Bollinger Band would do, just like you see what you see this place now, the
Yeah.
Bollinger Band creates like an upper boundary for you and then a lower boundary. Okay, so it will create like a range where the market will be going up and down, up and down, up and down, up and down. Now, when the news comes, it will now go to one direction.
Okay.
You understand? It will now break to one side. If you take your time to study Bollinger Band very well, you will see it. It happens a lot.
Okay, that makes sense. So those erratic movement is just preparing for the impact.
Yes. So that erratic movement, the best way to explain it is when Tinubu pick up his phone or his mic and Tinubu say, there will be fuel price increment, by next month. Now, he don't prepare the mind of the people. Now, when Tinubu prepare your mind like that, what the filling station will do is that they will now hold their fuel. Some will decide not to sell. Some will sell small. Some will not sell at all. Because why? They are thinking that, if this news come out, maybe it will be to their favor. So the one that they have bought cheap before, they want to sell it and make more money. Okay? Why some will also say, what about if the news come out and they think one day against us, which usually is not the case in Nigeria. But like in the case of the news in the Forex market, you are anticipating, there's a strong anticipation that when the news comes out, the market will either go to the north or to the south. So what happens before that actual news release is what we call panic buying and selling. So people will be giving up their position, sometimes because they don't want to just be in the market at the time of the news. And you feel that effect when big players in the market start giving up their position. Maybe the likes of Warren Buffett, Bill Gates, Facebook, they start selling, releasing their position. You feel it more. And you see a lot of erratic movement. It's so fast. But
Yeah.
one thing I will tell you is, as far as I'm concerned, this market is ruled by the technicals and not the fundamentals. Because let me give you an example. See this weekly chart, for instance. Look at this weekly chart. Do you think that from year to year, there were no fundamental announcements? This is 15 weeks. There are plenty fundamental announcements in between, but you can see that the market continued to go down.
Yeah.
Do you understand? So, what does that tell you? The effect of the fundamental announcement does not really affect the technical analysis. If the technical analysis says the market is going down, chief, that market must go down. What the fundamental announcement does is that, in fact, according to the founder of MTI, he said the fundamental announcement help us to realize the Fibonacci's number faster than we thought. So if the market tells you that it's going to 161.8, the fundamental announcement will make it happen faster than you thought. Okay? In few
Okay.
occasions, it might happen close to when the trend is ending, and it will quickly change the direction of the trend. Okay.
Okay.
But like I
Okay.
said, in most cases, this market that you see like this now, let me use this. This is NZD USD. If you look at this market like this now, you can see that this market is going down, right? The market is selling, going down. And so far, the market has not created a higher low.
Hmm?
See, from
It's
here is a
connecting.
lower low. This one is a lower low. So this is more like a triple bottom, right? So based on this triple bottom, maybe the market can sell. But if you go by the trend line, you will see that so far this market is a sell, right? This market is a sell. This massive reaction of buy that you are seeing is because the market has hit a major demand zone. That doesn't guarantee that the market will just say buy and go. The market will still possibly buy to the trend line and then fall down again. If you want to see it very well, you can go to Trading View. Because Trading View has more candlestick for you to analyze. Okay. So if we come to Trading View, let me just see. So this is Trading View. I can come to yearly candle. So I click on yearly candle and then I take NZD USD. So this is yearly candle for NZD USD. So let's compress it and see. Can you see that the yearly candle, that the market is actually going down? This is yearly. Oh, sorry, no, sorry, this is daily, it's not yearly. Let me take it to yearly, 12 months. So this is yearly. Look at yearly candle. So if you look at yearly candle, so far, let's even just apply the trend line. So we'll take this and we'll say this, and then come to this, right? So look at the bottom. Look at the bottom. Okay. If you look at the bottom now, if you say you are drawing the trend line, okay, from here and come here, you will agree with me that this trend line is already broken on the yearly candle, from the yearly candle, telling you that the market is still going down. You see that? So if you want to, you can use maybe let's do 6 months. You can give us more candles. Okay. So let's do 3 months. 3 months. Okay. So look at 3 months. Look at the overview in 3 months. So if in 3 months you can see that the market just recently broke, look at it, just recently broke the trend line. Okay, and it's selling. But this break that you are seeing now, this pullback that you see here now, look at this that one that you are seeing on MT4, those 3 level, 1, 2, 3, that we say is triple bottom. Look at it. This pullback now on this yearly candle is that big, massive buy you are seeing. So if we go to weekly candle here now, just look at it. Look at that buy. Look at it here. Is this 3 level? Now this one is pulling back. So even if you want to use this, trend line, let me see if I can get this one too. Oh, let's pick this one. Okay, so let's still bring it up to the bottom here. And then let's say, yeah, we break. Say, yeah, we break. And now this is not a new bottom. So even if this market is going to rally, it's going to go like this, like this, like this, hit this trend line, and then probably fall down again. Okay. So you can see that while you are thinking that the market is going to buy or sell in your hourly chart, your daily chart, your 1 hour chart, the yearly is telling you something completely different. Okay. All right, guys. So let's call it a day here.
Thank you so much, bro.
Okay.
Thank you.
Thank you very much, bro. It has been very educative.
Thank you.
Thank you.
Thank you, sir. Thank you, sir.
Bros, good evening, sir.
Yes, good evening.
Please, before we go, let me just chip in this one. I don't know what advice you have for those of us that have a small account. I find out that taking our trend direction from weekly, for instance, is does not give us really what we want by the time we come down to smaller time frame. And when you're on this smaller time frame, you hardly can see those candlestick formations that are really, holding. And that, creates a lot of error in our trading. We are still struggling, as a matter of fact.
Yeah, very correct.
And because of that, we now resorted to scalping. And the scalping is one of the dangerous one that if you don't really know what you're doing there, you keep price just moving up and down against you. I don't know how we can stick to this higher time frame, but not going as far as using a weekly as our trend direction.
Okay, so I did mention that we have trigger time frame and we have trend time frame. So even though we have all this confusion in the market, you can still stick to one time frame and make money. So why am I saying that? If I come to MT4 for instance, and then this is my weekly time frame. So let me just keep my weekly like this, and then come back here and say this is my hourly time frame, right? So this is my 1 hour time frame. Now, this is my 1 hour time frame. If you look at this 1 hour time frame, you can see that this market move all the way from here, all the way down, up, right? Now, on this my 1 hour time frame, so it's all about strategy development, right? You as a trader, you really need to develop a strategy, okay, that works. And from this chart, I can just show you one simple strategy. This is 1 hour chart. Do you agree with me that this is a double bottom?
Yes.
Okay, fine. So now you are looking for a double bottom and you have seen a double bottom. Perfect. Where is the last high before the second bottom? Agree with me that is here?
Yes.
So this is the first bottom. This is the second. This is the last high before the second bottom. Now, whether you want to compress your chart to any, I want to do it, but just look at the high that is above that high. Any high that is above that high, doesn't matter. So there's one here. There's one here, right? There's one high here. Now draw a trend line from this high and let it hit this high before the second bottom. You see that?
Yes, sir.
Okay, perfect. Now, what you want to do is to wait for the market when coming from the second bottom to break this trend line. When the market breaks this trend line, it doesn't matter any of the candles that break the trend line, just take the trade. And then put your stop loss below the lowest point of the double bottom. Carry your stop loss and come and put it here. So if you have done this for this market that moved like this now, if we have taken our entry from anywhere here, we probably would have made like 300 and 400 pips. It's 1 hour chart. And if you switch this chart to 30 minutes, you will see the break faster. Can you see how the market break and test the same place? If you switch it to 15 minutes, it will even be more clearer. The market break and test, and then the market take off. I don't know if this one makes sense to you. This is just one of the many strategies you can use to trade a smaller time frame. Is it clear?
Yes, it's clear. It's clear.
So you may want to adopt something like this. This is one. There are plenty. There are a lot. You can this same thing that happened here now. This same thing that happened here. Watch this place. Watch this place that I'm going to put my line now. Control B. Let's take out all these lines. If you put your line here, look at this place. When this market created this double top, you could have done exactly the same thing. Even you pick from here and draw your trend line like this. And then the market break. You would have been able to sell this one here for maybe 100 pips, 140 pips. So if you just try to target the double tops and the double bottom, if you are doing scalping on the smaller time frame, and now it will work better for you. It will be more better if you have an indicator that shows you the support and resistance. So let's even put a basic arrow indicator. Let's put a basic arrow indicator like FIP. So let's put FIP here and say okay, let's use the default values that there. Now you say this is FIP, right? Now from this FIP, you can see what is happening. You can see your bottoms and your tops. Okay. Now you want to treat this FIP as, because it repaints, so it's not guaranteed that when the arrow show, that means the place is the last point. No, the market can still push the arrow from where it is and go even higher. Okay, so don't 100% rely on it. But the way I want to look at it is, you see all these points that this arrow comes out, I want to treat them as key support and resistance level. For your information, this arrow now is fixed. It will not change again for life. Forever, it's going to remain like that. When this market formed this arrow, like now the market formed this arrow now and formed this one. From when the market formed this second arrow, this arrow becomes fixed. So since this arrow is fixed, you can say this is a support. You can say there's a support here. So I start looking for the market coming back to this support level. Do you understand? Yes. This one is fixed. I start looking for the market like now. The market came down. Look at this place. Watch this place. Do you know you can take advantage of this? Watch it. This place we say is a support, right? This is a support. So let's create a zone. This is a support zone by the body of the candle and this wick. This is a zone. Did you see any bullish candle in this area? No bullish candle. No. So you would have continued selling as soon as the market came and break it. The market came with massive momentum, and it break through this support level. And then the market continued to sell. You could have just rushed into the trade from here aggressively and take maybe like 30 or 40 pips, like that. See, in fact, even 100 pips safe. If you come down here, it's about 130 something pips. So this is a support area, but for the market to buy, the market need more buyers and sellers. So you are supposed to see a bullish engulfing candle in this area, and then you say, okay, the market has changed direction, let's buy. But we didn't see anything like that. So you sell. So when the market comes to a zone or a region of support or resistance, what you are looking at is what is the kind of signal that will move the market from that area. If it's a support area, you need a bullish signal. If it's a resistance area, you need a bearish signal. But if you are now seeing the opposite, then you can go aggressive. You can go aggressive. And I also gave you a formula some time ago. I don't know if I still have that formula. I think I did it for you guys with the empty file. Let me see if I have that. I don't think I have that here. No, it's not here. Let me see if I still have that in 1 minute. Empty file. Empty file. Empty file. Okay, I think I did it with this. I did it with this application. Let me see if it's still there because I saved it then. If it's not easy, okay, yeah. Okay. Is that account still existing? I don't know, but what I just need is a pattern. So this one, yeah. I created a system like this some time ago for you guys. Right? Yeah. Let's see it on 4 hour. Let's see it daily. All right. So I created something like this for you guys some time ago. How many of you still remember this?
This is like a ribbon.
Yes, it's moving averages. So I use 21, 14, 10, and 7. Okay. And now, usually when the moving averages are parallel to each other, when 1, 2, 3, 4 are parallel, see, don't bother, don't waste your time. Don't stress your head. It doesn't matter whether the candle comes back like this and go even to the sky. In as much as these 3 lines, 1, 2, 3, 4, in as much as they did not cross each other, the market is still in that direction. It's still going. Now the market is saying sell. So the market is saying sell because the white is up and the gold is down. The market will be buy if the white is down and the gold is up, right? So now, if this gold, let's say the market is, take for instance, now the market is buying, and then you see this market come back with all these plenty candles, but you see this gold does not break across this blue and red and white. Trust me, this is like a catapult. When you pull a catapult and then you release it, that's exactly what this thing is doing for you. So this is like pulling a catapult to the back, and then you release it. That's all this movement. In as much as this line does not cross each other, this trend is still intact for a buy. Does that make sense to you?
Yes.
So you can carry this one to your lower time frame, maybe 15 minutes or 5 minutes, you know. So look at this now. This market has crossed, this gold has crossed to the up and the white is down, telling me that the market is now buying. Even though this market came down like this, you can see that the gold is intact, is up. It didn't cross the red. This market will continue to buy until such a time that cross will happen. So even if you scroll back in time, you will see the places this thing has worked before. And all you need to do is to see how you can apply it to your current trade. So you can see 5 minutes is very bad. See, very choppy. too choppy. You understand? Look at it, it's so choppy. So you hardly get a good trend from 5 minutes. But if you put this same chart now, if you switch it to daily, you see a good set trend. Switch it to weekly, you see a powerful set trend. You see that? So it's either you want to go to your 5 minutes and your 15 minutes and be going back and forth and struggling, or you want to be patient to wait and see when a higher time frame gives you a good signal to sell or buy. If you follow the explanation I gave to you, see, if you follow this explanation I gave to you, let me show you something on the Boom 500. Let's use this Boom 500 for instance. And then let's go to the weekly chart. You know, everybody is scared of the chart is too big, the chart is too big. Look at this weekly chart. I've explained the concept before you, right? And I said, come here, and sell this market for years, sell this market for years. Even if it is 20 naira that is in your account, you will still make all this profit. It doesn't matter whether the weekly chart doesn't change anything. Whether it's monthly, whether it's weekly, it doesn't change anything. Forget the fact that your money is small. Your money is small, you can trade monthly, you can trade it from any chart.
We are looking at a situation where one pullback will wipe up the whole thing. So
no. See, wait. Now I'm showing you a strategy.
Stop loss. You can see how much is,
No, see, listen to me, offering. I'm showing you a strategy that works. I said I just put a line. Okay, let me put a line in the possible places where the market will sell from. Yeah. Are you seeing what I'm doing? I'm putting a line on the black candle, the top of the black candle, out of the black and green. Every place I have a black, immediately followed by a green, I put a line on the back of the black candle. So, and I'm telling you that if this market, like this one, this present one that is here now, I put a line here, and I say, the day this market just gets here, I take a sell. I will sell. I can switch to a smaller time frame. Watch this. Watch this. You are looking for small stop loss, Abi. After I enter the sell here like this, I will switch this chart now to say 4 hour. Okay. So let's see. The 4 hour. Look at the line. Are you seeing where the line is? Look at where the line is here. And then I say I will put my stop loss above the Aikiashi, above this one, and I put my stop loss here. Even though I am on the weekly chart. Are you seeing that? Now, this is my entry. This is my stop loss. Even if it's $1 that is in your account, you can take this trade from the weekly chart.
Okay.
You see, it is better for you to stay where you are seeing well than for you to go to a place where you even wear goggle and you are not seeing.
Okay.
You understand it? So that's the way me I look at it.
Please, where did you say your stop loss is?
See my stop loss, these two lines. Okay, let me remove the other lines. Let me remove the ones that are not part of this analysis. Delete all the ones that are not part of the analysis. This is the analysis. I said this bearish candle breaks this key level. Look at the key level here. This is the key level. Right? Ideally, if the market don't want to sell, let's say the market want to reverse, the candle will not close below this level. Maybe the wick will just reach here and it will go back. Okay? But now, this market breaks below this key level with this candle. And I said, come to the Aiki Anshi behind this candle here. and place a sell limit. But your stop loss, don't take your stop loss from the weekly. Go to 4 hour or daily or 1 hour. Okay. Remember, this is where I say I want to sell from. I say now I'm on daily. So I can even say on daily, I say, let me put my stop loss here. Put it on one Akianshi above the Akianshi that you are taking the trade from. So if I switch to 1 hour, if I switch it to 1 hour, look at the Akianshi that I'm taking the trade from. I switch it to 1 hour.
Is
Okay.
the Akianshi purchased?
You see?
Is Akianshi purchased? Is it purchased or free?
No, it's free.
Akianshi.
Akianshi is free. You don't need to pay for it.
Okay. All right.
So look at the candle. We are taking it now. I say on the 1 hour, I can even get a smaller stop loss. Okay. So on the 1 hour, I come here and I say, put my stop loss 2 or 3 candle Akianshi away from where I'm taking the trade. And I have a smaller stop loss. And then when I switch back to the weekly,
say one Akianshi.
No, I'm just telling you because I switched to if I want to do it on the weekly, which is the main chart, I need to put it on just one Akiashi away. This one.
Okay, on the weekly.
This one Akiashi away on the weekly now is a big amount. Do you understand? So, but if you switch to a smaller time frame, like 1 hour or 4 hour, you can actually do like 1 or 2 Akiashi away from where you are entering. And you will make this profit. Just imagine this one. Imagine this one sold like this. No drawdown. See this continuation.
The moving you mentioned. Yes.
You say?
I understand. A second question, please. The moving average is you said you used. You said you used 7, you used 10. Was it 20? You said you used
21. I used 21.
Can you repeat?
21, 14,
21, 14,
10,
10,
7.
7. Okay.
They are all exponential. But it doesn't matter whether it's exponential, whether it's simple, it doesn't matter. But try to stick with either simple or exponential, and you'll be fine.
Thank you.
So usually a smart trader, if you're a smart trader, what you will do is whenever you see that the market is going against the moving average, that is when you want to pull your trigger. You understand? When the market is going against the moving average. This is GBP USD. Now, let me show you this GBP USD now. Let's go to the other. Let me switch to GBP USD. With that, I can actually this thing. So let's switch this chart to GBP USD. GBP USD. Where are you? GBP USD. But I just come here. GBP USD. Right? So let's read this. GBP USD daily chart. Oh, it's like now that one is updated. What I want to show to you. Okay, but let me see if I can see it on. Let me scroll the chart back if I can see it. That chart is not updated, but let's see. Okay. You see this place? Look at the place I want to show you. This place. That's what you are seeing here now on this chart. You see this chart? Look at this place. Are you seeing this place? You see this bearish candle? And then followed by this bullish, then bearish. This place now is what you are seeing here now. Is what you are seeing here. Look at it. This place is this place. Now, that explanation I gave to you now, this market has broken a key level. This is a key level broken by this market and then immediately form a bullish candle. I said, do not worry. come to the back of this Aikianshi here and sell this market. Sell this market here. And then put your stop loss above this eye. Put your stop loss here. Because you can see that the market has already tested this eye, right? So as soon as this candlestick close, you sell, say sell here, stop loss above here. And then the market without hesitation drops 340 pips in 5 days. 340 pips without any struggle. It's so freaking simple. Trust me. It's something I have tested over time and it has worked for me 100%. Look at this one. Look at this one. Watch this one. The market break. Are you seeing the market breaks this key level? Come back to the back of this eye, this candle. This is, you can see Akianshi is not showing on top, meaning that the candle is bigger than the Akianshi that is there. Okay. So the candle is bigger than the Akianshi. So you just come to the back of the candle here and sell here. Sell. Just sell this place. And the market will just, from where you sell, drop. You will not see this in any textbook, so don't go and try to want to read it anywhere. You will not see it. I created it by myself. So, and it works for me. So if it works for me, it will work for you.
So with this strategy now, what this means is that you'll be willing to leave this trade to run for days.
I can leave it to run for years, not days. Years, the trade will still be running.
Some of us need a fit leave trade overnight.
Okay.
Well.
So I hope it's clear. You guys should go and try it. Aikianshi is free. Just download Aikianshi to your chat. And all you need to do to get Aikianshi is go to, I already showed you, go to MQL5. Go to MQL5. Yeah. If you want on MT4, you come to MT4 and say MT4 indicator, type Aikianshi. Okay, and say enter. It will give you plenty Aikianshi. Just go to the free one. Say select free Aikianshi. See, there are plenty. All these ones are Aikianshi. But me, I use this one. I use this file. Let me even download this one. And now that I don't think I've downloaded. Okay, no, I think I've downloaded this one. I think I downloaded it already. This is MT4. Well, let me check. I don't think I downloaded it on MT4. 1 minute. MT4. Aikianshi. Now, if I don't have it on my MT4, okay, I don't think I have it on my MT4. Smoothed Aikianshi, I don't have it. So let me download it in your presence so that you see. Okay. So you come here, click on Aikianshi Smoothed. Okay, click on it and say download MT4. Okay. Open MetaTrader 4. Now it will automatically open MetaTrader 4 and install for you. So let me see the one that's opening. Okay. Now it open with an AvaTrade for me. So let's see. I have two MetaTrader for my computer. So it's opening with the one of AvaTrade. So let's see. I want to show you the way it works. So once it's installed, we'll open it and then you see how it works. And you can do the same on your own. Okay. You don't need to struggle. I'm using it on MT5 already. On the MT5, which is this one. This is it. I'm using it on MT5 already. So the smoothed Aikianshi. That's what you are seeing here. So I've not used it on MT4 before. So let's see. Now, if it's taking too long, that MT4 is taking too long to open. I can also come here on my own MT4, and then I come back to the market. Okay, come back to market. Where's market? Okay, market. Not this time, not purchase. Just come back to indicators, and then you can come here and type smoothed IKEA.
Okay, that's how you live here.
Smoothed IKEA. Now you can see it's there. So I come here and I type it on my because it's installing on my Ava. So I want to do it directly on my FSTL. So I come here, click on it, click on download, and then it will automatically download. You see it now, it has downloaded. So if you come to here now, it's already there. So once I click on it now, it will apply. So let me put, this is a plain chart. This is plain chart with candlestick without IKEA, you can see. So now this is the smoothed IKEA I just downloaded now, and I say apply. So you see the way it's applied. Okay, you see the way it's looking like. Now, I have to set it to look the way I was showing you now. So you come to input and change this period to 1. Change this period to 1. Change this to exponential. Change this to maroon. Change this to navy blue. Play on background false. Okay, enable this background false. I say okay. Okay, so when you do it that way, it will not start showing. Okay, so let me. True. Change this out to true. Say okay. So you can see now it's not showing like the one I have originally before. Can you see it? But the problem with IKEA on MT4 is that it doesn't expand like see MT5 for instance. If you are zooming the candle, the IKEA expand with the candle. But MT4 is not like that. So MT4, what I do, you only zoom it to 3 times. Okay. So if you put it at this level, it will appear well. But if anything higher than this level, it will not show well. Okay, because it cannot expand the thickness. The thickness cannot be increased. It does not have option for you to increase the thickness. Okay, so I have another indicator that is also IKEA. Okay, I have another indicator that is also IKEA that I will use. I have another indicator that is also IKEA that I use, and it's called hammer. Okay, hammer 2. That's the one that you are seeing on my chart. So that one, you can set the width of this one. Okay. So you can see that it's opening with my distance. So this one, you can come here. If I set the width now to say 13, I can zoom it to maximum and the thing will follow. Can you see that? But that feature is not on the general IKEA for MT4. So if you don't want to struggle with it, it's better for you to use MT5. With MT5, you don't need to do anything. You just work normal. Okay. All right. Any other question? We need to close. So thank you everyone for your time. Hopefully you'll be able to apply some of these ideas and see how to improve your trade.
Thank you too.
Thank you.
Okay, have a good night.
Thank you.
Well, thank you, Prof. God bless you.
Thank you very much.